Hi everyone, and welcome to this month's edition of Rise High Live, where we are going to bring to you today the tax tips for individuals, property investors and business owners. And very excited to be joined by the 2018 Australian Young Accountant of the Year, Roo Lim. Welcome.
Yeah, thank you. Hi.
Obviously, Roo will be our expert tonight, giving us some great tips on preparing for tax time, which is coming up very quickly now. It's hard to believe 30 June is just around the corner now. So Roo will be giving us some tips on preparing for tax time and just whatever else you want to talk to us about. So definitely one not to miss. We really love getting your comments and questions throughout the session, so please feel free to leave a comment below, or you can email Amanda at Rise High, but we really love to interact, so please feel free to comment or question as we go through. So, Roo, should we get started?
Let's go.
So what we might do, I think we will start with individuals. I think is a good place to start. So let's just start with something basic, like what do individuals need to prepare to get ready for tax time?
Yep, I guess the usual suspects here, like we obviously always need our pay-as-you-go summaries. Some people still call it group certificate. So that's one thing that you need to get it ready by 30th of June for tax time. If you've got savings in a term deposit or your savings account that is accruing interest throughout the year, so you probably have to provide a statement for your accountant to prepare for tax time. If you have private health throughout the year, then the statement at the end of the year will be important as well. And obviously any receipts that is work related, get that together at the same time. This is probably the time for you to start digging out all those receipts. People do forget about it throughout the year. You shove it in that corner, and this is the time to look into it.
And I guess like keeping those receipts is the difference between. It really does make a difference in your tax refund, doesn't it?
It does. So, and I think one of the biggest things that people keep the ATO keep reminding all the tax accountants is that substantiation proof is quite important in preparing your tax return. That yes, there is a bunch of things where you can claim without receipts, but for me, it's still good to have everything get together, put it in a file, ready for your tax accountant to prepare for it.
Yeah.
Now, one thing I do need to remind people though, with the recent single touch payroll rollout, which I'll explain a little bit later on what that means for business owner, and for employees, for pay-as-you-go individuals, that means that you might not receive your pay-as-you-go summary or group certificate.
That's the single touch payroll. So things are going to change because normally employees get their group certificate at the end of the tax financial year. So what will happen now instead of them getting a group certificate?
So instead of employers giving you your group certificate by the end of the financial year, you should be able to just log into MyGov and download that group certificate.
So everyone needs to make sure they've got a MyGov login.
Yeah, so have your MyGov login.
Actually download their group certificate themselves.
Yeah, link it to the ATO. Like this time of the year is really good to go through that process if you don't have an account already. Yeah. In case there's any hiccups, this is a good time to call.
So how do people get a MyGov account if they don't already have one?
So if you just log into MyGov and literally just click on sign up if you don't have one, make sure that it's linked to the ATO, because it's just an online portal for you to have any sort of services you can have.
So that's pretty important for all employees.
Yeah, especially the ones especially if you're one of the employees that is in a bigger organization, they should be your employer should opt in single touch payroll already. And what that means is basically you will not receive a physical copy of your group certificate anymore.
Yeah. Okay, great. So that's good. So there's lots of stuff that you need to prepare for tax time. So obviously best, especially if you're expecting a refund, it's obviously best to try and get your stuff together as quickly as possible so that you can get the refund in your pocket as quickly as you can. What sort of expenses are deductible for employees? What can they actually deduct?
Yeah. Well,
generally,
there's a bunch of stuff. It does depend on what industry you're in. So, for example, if you're a teacher, then there's things like resources that you've got for the kids, stationery, and things like that. But these are the things that you need to look into what industry you're in to be able to know what deductions you're eligible to deduct. I won't delve into that too much, but one of the things that I probably want to bring out is something that has been brought in the last few years, but people don't really know about it. Now, us as part of the mortgage broking team as well, we talk a lot about property investing to prepare for retirement. Now, the other way to prepare for retirement is to contribute to your super. If you're working for an employer, your employer would have contributed super into your superannuation account throughout the year. However, you can do that on your own as well. So,
okay, so you can use that as a way to reduce your taxable income.
Yep, that's right. So I'll explain how it works. So for every individual, you have up to $25,000 a year to contribute to your super. Now, that includes the amount that your employer is putting in. So for example, if your employer contributes $10,000 into your superannuation account, you've got up to $15,000 to contribute to your super, and that amount can be included in your tax return as a tax deductible expense.
Okay, so that's a way that you could
Yes.
manipulate the amount of tax you have to pay.
Correct. But
by still keeping the money.
Yes.
Well, kind of. It's kept in
yeah, you can't access it until later,
it.
but it is one way, legitimate way to reduce the tax that you pay to the tax office.
Are there any other suggestions that you've got?
One thing I would say about this strategy is that if you were to go ahead with it, first of all, talk to someone like a financial advisor, because it is a long-term plan, especially when you want to put that amount of money.
And you want to make sure that if you are putting that money into super, that you're doing something good with it.
Yeah,
when it's in super. So whether you're with a retail fund or an industry fund, or whether you have your own self-managed super fund, you want to make sure that you're doing something productive with that money.
Yeah, definitely. And the other thing I would say,
also need to make sure that you don't need to access that money.
Correct, that's right. It's money that's going to be put away until retirement. So you want to make sure that it's money that you have capability of putting it away, and you don't really have to have that access anymore. I do want to add one thing. Make sure if you do go down this path, that you put the money in before the 30th of June. When I say before, that amount needs to hit the superannuation account by the 30th of June.
Okay, so if people are thinking about that strategy, that's something that they really need to start thinking about now.
And then
they money just can't wait until 30 June. Yeah. Okay. Yeah. So that's a pretty good thing. So just shout out to Twee and Priya and Susan and Roger. Thanks for joining us, guys. Hope you're enjoying the show. But yeah, definitely keen to hear any questions or thoughts you have, or loving the love hearts and the happy faces. So still on the topic of individuals, PAYG, employees. So you did a Facebook Live before the election of, I guess, different things that were going to come up potentially out of the election with the two different sides of government. So now that the election's over and we've obviously got a Liberal coalition government, what does this mean for individual taxpayers? What can we expect to see, I guess, moving forward?
Yeah, this is, I guess, the exciting part, because they've actually brought out a lot of promises, I guess, for individual taxpayers. So one of the most exciting things that I've mentioned before that will be brought out in the 18-19 financial year, which is the one that's coming up, is the low to middle income tax offset. Yeah. So for individuals that's earning up to $90,000, you are eligible to have a tax refund of up to $1,080 back into the tax refunds. So you should be able to see that in the next.
So people should expect about $1,800 tax refund.
1,080.
Oh, 1,080.
Yeah, for individuals, okay? So, however, this law hasn't passed yet. Okay. With the change of, like, with the government going in, government going out, things do take a little bit of time. Mm-hmm. So this law hasn't been passed, but what the ATO is promising is that if it does pass after the financial year, you can still lodge a tax return, and the ATO will automatically do an amendment when the bill has passed. Okay. And then issue the refund afterwards. So you don't have to do the own amendment yourself.
The ATO that's pretty good. So that will apply for the 2019 financial year.
The one coming up, the next tax return that you do.
Yeah. Well, that's pretty exciting. Now, I guess saying that, if everyone's going to be $1,000 richer potentially, make sure you do something sensible with that money.
Yes, that's right.
That's an extra $1,000 that you've been, that's a pay rise for you effectively. Yeah. Do something good with that money. Have a look at what you're investing in, what you're saving for. Make sure that you're going to use that money for good and not just waste it.
Yeah, definitely.
Is there any other I guess, big changes from, or is that the major one?
That will be the major one for
Yeah.
this financial year. And obviously, if you just look back to the last few Facebook Live, you should hear that there will be a few more coming up in the next few financial year.
Okay. And when can you start lodging your tax return? Do you have to wait till after 30 June? What's the...
Yeah, so 1st of July is the first day that you can lodge your
Okay.
tax return.
For all the eager beavers?
Yeah, always. People that are usually getting a tax refund back would like to
get it
it done as soon as possible.
If you can get it quickly and put it in your, put it in your offset account,
that does help.
put it in your mortgage, that's fantastic.
Yep.
So, we're all for that.
I know. But usually with people that are eager, what we tend to realize is that they do miss something along the way when they, try to lodge something too quickly, and then if there's an error, they have to go back and amend it. So look, the tax office is not going to look at your tax return until the 5th of July. The first lot of refunds are going to come out until maybe the 10th or 12th of July. So there is no rush to do any of this.
Yeah.
Make sure you get everything together, match it with your past pay slips, for example, just to make sure that the amount that is actually showing on your birth certificate is correct. You'd be surprised how many mistakes there can be, because it's all human processing in the background anyway.
Yeah.
There's a payroll officer working in the background doing all these things. So, double check everything is probably what I would say.
Awesome. Okay. So I think we've pretty much covered it for individuals, employees. Would you...
Yeah, that's pretty much
that?
it. Yeah.
Should we move on to property investors?
Yeah.
Okay. So property investors, let's see. For taxpayers who have property investments, investment properties in properties or shares, what do they need to prepare for tax time?
Yeah. So if you are a property investor and if you've got a property manager looking after your property, at the end of the financial year, within that first week after the 30th of June, you should be receiving an end of financial year statement from your property manager. So that should cover pretty much everything that you need to report in your tax return. Now, the only thing that you need to make note of is, well, one, yes, double check all the figures if it's correct. And two, make note of all the expenses that's paid out of your pocket. So not through the property manager, something that's out of your pocket.
Extra things.
Yeah, and the most common thing, I guess, that comes out from your pocket, not through the property manager, are the interest on your bank loans.
Yes. And there's a really interesting thing with that, because one strategy that I've seen a lot of property investors do, which can be quite popular if they think their income tax is going to vary from year to year, is to actually bring 12 months worth of interest payment ahead and actually prepay the interest expense on an investment loan before the end of financial year. Now, probably too late to organise that now for
it depends on how fast.
Because that probably takes about a month to do. But I mean, I guess just think about that in the future and think, it can be a really good strategy if you have, say, a husband and wife, and let's say that the wife is currently pregnant and looking to go on maternity leave next year. Obviously, her taxable income will be a lot higher this taxable year than it will be next taxable year. So you might want to bring forward the prepay the interest for one of your investment loans to take advantage of those tax benefits, when the income is higher, and have a repayment holiday when the income is lower. So that's something that people can think about for the future as well.
Yeah, so I guess this is one strategy. If you know in advance what your income's going to look like in the next 12 months, it's really good to apply. But yes, like what you just said, you have to be careful with that. If you do for it this year, then you're going to miss out on next year.
That's right.
You're going to
So
be quite confident.
It needs to be a good. Everything needs to be well considered to make that strategy work.
Right.
But I've seen it work really well in some situations.
Yeah.
So, what about, following the election? Has anything changed for property investors?
For investors, nothing too big. So
it's probably a good thing, really.
Yeah, for property investors, this election is probably one of the best outcomes possible.
Yeah.
There were one of the biggest things.
Potentially some big tax
yeah,
deductibility threats for property investors
Yeah.
if the election went another way.
I think one of the biggest one was the negative gearing and capital gains tax. So
would you say that those things are safe?
Yes, as of now.
Yes.
It is safe with the current government. So negative gearing is still here to stay. Whatever you've seen in your last tax return it will still apply to this tax return. If you do sell your property in the last financial year, you still can apply the 50% capital gain tax discount onto the sale. Those are all the good news applicable from last year to this year. Nothing really changed. I guess one of the things that was applied only recently, well, in the last tax financial year, is the depreciation rules. So as of like last year and the year before, if you were to purchase an investment property after the 10th of May 2017, you can no longer depreciate the plants and equipment of the property investment. So the inside, like, if the ovens, fans.
And is that for all properties, or brand new properties are excluded from that?
Brand new properties are excluded from that. And if you purchase the investment property prior to that 10th of May 2017, that rules grandfathered as well. So then you're okay, but this has been brought up last year. So you should be aware of it already by now, that this rule will apply to you if you bought a second-hand property.
And last year they also changed the rule about deducting travel expenses.
Yes, that's the other one as well.
Correct?
Yeah, that's right. So all the Queensland trip that you're going to do, that's not
that's a shame. That was a shame that they changed that rule, wasn't it?
Yeah, that's right. So that's it. Like,
at least, at least we've still got the negative gearing, we've still got depreciation. So,
I think
there's still some really attractive tax advantages of property investing.
Yeah, definitely. Yeah. But you probably repeat this too many times now, but you shouldn't invest because for tax benefit.
No,
what we've experienced,
it has to make sense
in the long term.
Benefits.
And I think this election is probably a really great reflective of that. Because with changing governments, tax legislation changes all the time as well. So it's really more sensible to invest for long-term purposes and not for tax purposes only.
Yeah, the tax should just be the cream on top.
Yeah, a bit of bonus at the end of the year.
Yeah.
Put the money to good use.
And also, I guess, another thing that property investors can do, if they are expecting paper losses from their property, and they are expecting a tax refund, do you recommend that investors actually do a variation to their withholding tax throughout the year, so that they can actually, instead of getting that tax refund as a lump sum, they can actually get it throughout the year, and they can get it earlier and, have that offsetting their loan?
Yeah. Well, yes, it is recommended. And if your property is consistently giving you that amount of outgoings every single month, and you know that it's going to be negatively geared, usually I do recommend you to have your property for about 12 months so that you get a more accurate figure throughout the year. And then after the 12 months, after you've done your first tax return, get that variation done as well, so that the figure is a little bit more accurate.
Yeah.
But yes, it is recommended because obviously getting more money back into your pocket means that the extra cash can go into your offset account.
As long as you're saving that money and not spending it.
Yeah.
Okay, cool. Okay, anything else you want to talk about with property investors?
I think that's it.
Covers it. Let's move on to business owners then. So what do business owners need to be prepared for, I guess, moving into the next couple of weeks?
Yep. I guess that's again a very general question. Yeah, obviously the common thing that you need to keep is obviously the receipts, bills, invoices that you've incurred for the business, any proof of income they've got for the business, and the bank statements as well, just to match all the outgoings and income matching each other by the end of the financial year. But yeah, generally there should be that. And if you're using cloud accounting, this is probably a good time to tidy up, have a look at it and see if there's anything that's been sitting there for a long time you haven't dealt with it. Maybe a bill that you haven't reconciled or an invoice that you haven't chased up the bill for. This is probably a good time to look into.
So good time to clean it out, do a spring clean.
Yes, that's right. That's right.
And are there any any sort of anything really? I mean, obviously we've only got a couple of weeks now to the end of the financial year. So is there really anything that businesses can do in the next couple of weeks to really make a difference to their tax bill at the end of the year?
I would have to say, again, record keeping. Make sure that whatever that
What about the asset write-off? Is that something that people still have time to do?
Yes, they do.
Yeah.
We're about 2 weeks into the end of the financial year at the moment. So good time to
buy
review.
something quickly.
Yeah, good time to review if your business needs an equipment or maybe a car or a truck to sort of help, you were thinking about it for the whole year anyway, this is probably a good time to decide if that's the way to go.
So there's probably going to be lots of car yards doing end of financial year sales, trying to target these business owners.
Oh yes, I think the
signs
going up everywhere.
Yeah,
and I guess the good news for that is because again of the election, this legislation has already been passed. You've got from I guess today, if you're thinking about it, up to 30th of June 2020 next year, to purchase an asset up to $30,000. So that has gone up.
Awesome.
And that is considered as an expense for your business.
Excellent. So what are the other things that you would do if business owners are looking to reduce the amount of tax they pay to the ATO?
One of the things I would probably say, remind business owners, is that especially if you've got employees, you probably have to prepay your superannuation expense. Now, let's rewind a little bit. Usually you pay your superannuation to your employee the month after the quarter. So for the June quarter, you pay for it in end of July.
Yeah.
Now, if you do that for this financial year, that superannuation cannot be counted as a tax deduction.
Okay, so you can pay that in June if you want to.
Yes. So the tip is to pay it this week, because the majority of the business owner would have been using the superannuation, so small business superannuation clearinghouse already, and that does take a while for it to clear.
Yeah.
So my advice is this week, like today, if you can, get your accountant or your payroll manager to just process the next few
that's
pay
a
runs,
great tip.
and just get that figure in your hand.
Yeah.
Pay for that as soon as possible. Make sure that it's cleared by the end of the financial year, and you can claim that as a tax deduction.
Yeah, that's a great tip. I guess the other thing I wanted to explore is, is it also a good time for people to reflect on their business ownership structures, to sort of see, are there more creative ways or better ways of managing their profits too, and also asset protection.
Yeah.
To actually get a better outcome for them. Is that something they should consider as well moving into the new financial year?
Yeah, absolutely.
The new financial year is always a good time to set up new structures if you're going to do that.
Yeah, so that's what I always say is this is a good time for you to review it and see, well, look, this is becoming a lot bigger than what I think, for example, and you might want to start hiring someone, and maybe the structure that you're in is probably not the best structure that you should be in. So talk to someone that you can trust and make sure that you get the right advice before you change anything. And this doesn't really apply
I think that's especially the case if you're a business owner and a property investor.
Yes,
there's definitely some benefits there that you can, really structure things right.
And I'll just add to that as well. Structuring doesn't apply to just business owner. I think a lot of clients are quite surprised that you can put your investment properties in other structures as well.
That's right.
This is a good time. The best time to talk to someone is before you purchase that investment property, and make sure that you got that right, because to change the structure after you've purchased the property can be quite expensive.
Yeah. And we got a comment from Alan. Thanks for your comment, Alan. So Alan talks about the fact that the payment summary is not needed anymore.
Yes.
As employers remit the information every month to the ATO. That's called the single touch payroll. We have covered on that already.
Correct.
During the session, but let's touch on that again.
Yeah.
Is there anything that employers need to do as far as single touch payroll is concerned?
Yeah. So I'll explain what single touch payroll means.
Yeah.
We keep using that. So single touch payroll is, I guess, it's an attempt from the ATO to go paperless, paper-free, trying to make sure that all the information matches by the end of the financial year.
Yeah.
And it's a new way to report the employee's tax and superannuation information as well. So for a business owner, if you've got employees, you should already be informed about this, and you should be already starting to opt into single touch payroll. So
is it compulsory?
Yes, it is. Well, there are some leniency for those under 4 employees, but I won't delve into that too much. Generally, as a small business owner, you should already be opting into this. And what that means is, in your everyday running a business, what that means is when you do your pay runs weekly, fortnightly, monthly, however your pay run should be, at the end of producing that pay run, you should also be filing that information to the ATO at the same time. So the ATO information will try and match your company's
and
information.
And the accounting software, the cloud accounting software like Xero, that makes it really easy for you.
Yeah, it does. And I believe that a lot of the software these days are already has that feature already.
Mm.
And what happens is that by the end of the financial year, the employer, so you as a business owner, shouldn't need to send your employees payment summaries anymore, group certificates
No,
anymore.
because they'll all be with the tax office.
Correct, that's right. So what will happen is that you will have access, which is what I was talking about at the beginning of the session, where as an employee, you should be able to see that information through your MyGov.
Yep.
And your tax
So would you
accountant.
be able to see that in like real time as, you know, like if employees log in any time to the MyGov, would they be able to see
your year to date?
year to date?
Yeah, that's a good question. As of now, the answer is yes. I'm not sure how accurate it is because I've already have experience where the client goes back and amend it.
Okay.
So it might not be too accurate.
Right.
So I wouldn't put it this way that again it is human in the background, so there will be error. So, but that is one way to know how much you're getting paid as of today.
Yeah. Okay.
Yeah.
Cool.
But yes, so that's pretty much what single touch payroll is, and you shouldn't need to send off the payment summary at the end of the year. And I guess the trick going well, what the tip here is, if you haven't been told that or you haven't known that you need to opt into single touch payroll, please get into touch with someone and get that sorted.
Yeah, that's a good tip. So we're nearly out of time, but are there any extra tips that you want to leave for business owners?
I guess this is not just for business owners, I think for everyone as well. I did realize that over the last few months, our clients have been receiving a lot of emails and text messages from the ATO, seemingly from the ATO anyway. It is true that the ATO is going, again, try to be paper-free, paperless. So it is quite legitimate. It could be very legitimate that you are receiving a message from the ATO to remind you to lodge a tax return if you haven't, or pay a overdue debt if you haven't. But because of that, obviously there's more opportunities for scammers to be active as well. So
okay, so what sort of scams are you seeing?
Pay this, otherwise you'll be convicted, or your house is under surveillance. All sorts of things like that. It sounds very crazy.
I've also heard of a scam where people are getting called by people that supposedly work for the ATO, telling them that they owe the ATO lots of money and they have to transfer the money immediately.
Yeah, and they kept them on the phone.
It's really important that you really speak to your accountant before you act on any of these informations, because you don't want to sort of end up in a situation where you're getting scammed. So it's a bit scary out there, but
it is. Well, with everything going technology, there's more opportunities for people like that. So you just have to be careful.
So keep a lookout.
Yeah.
Well, hopefully that's given you some insight into preparing for end of tax time as we head now towards the 30th of June. Now, we actually have our next property investment seminar on the 1st of August. So if you have been thinking about adding a property to your investment portfolio, this is one that you should definitely come along to, or even if you just want to learn more about different property types. I'll be talking about all the different property types you can buy. I'll be looking at established versus new. I'll be looking at apartments versus townhouses. I'll be looking at different property investment strategies, subdivision, renovation, developing, all different types of things, and going through the pros and cons of each different investment strategy for you. So that will be a really good informative session that you'll be able to walk away having a bit of an understanding about what is going to suit you. It's not a one-size-fits-all approach. So different investment properties or different investment types will suit different investors at different stage of the journey. So hopefully that will be really useful. We've already got quite a few people registered for that one, so we've only got limited seating left. So 1st of August, if you want to book in for that, go to the risehigh.com.au website and make sure you register for a ticket for that one, because we do only have limited seating left. I think that brings us to the end of the session tonight. Was there anything else you wanted to add, Ruth?
Yeah, that's it. Just give us a call if you've got any questions.
Yeah, absolutely. I mean, if you haven't got your accounting sorted out, please, who better to do it than the 2018 Australian Young Accountant of the Year, Ruth? Not only is she a fantastic accountant, but she's also a property investor and a business owner in her own right. So she definitely can relate to her clients and really make sure that she gets them the best outcome. And so thank you for everyone that joined us tonight, and we will catch you next time on Rise High TV. Okay, bye.